Hey, welcome back everyone. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. All right, now let's throw down. Okay, there's no doubt about it. Friday's PCE inflation report may be a pivot point for the Fed. You guys better believe that one. From the article, all markets can be impacted by U.S. inflation. So there's a crowd on Wall Street holding their breath, waiting for low PCE data. They might get their wish because most economists are predicting a slight dip in inflation compared to March's numbers. However, if the report misses expectations, it could get ugly. Even a small increase could reignite fears of persistent inflation and prompt a more aggressive response from the Fed. Conversely, a significant decrease in inflation could signal room for the Fed to ease off the brakes. Friday is also the Cat Live Day and options expiration day. So buckle up, Buttercup. Friday is going to be lit. From Yahoo Finance, Wall Street is getting even more bullish on stocks. We're not talking about hedge funds here. We're talking about prime banks and brokers. Nearly 5 months through 2024, the major stock indexes are near record highs. Wall Street doesn't think this rally is over either, as the outlook for earnings and economic growth have steadily risen throughout the year. In the past 2 weeks, 3 equity strategists tracked by Yahoo Finance have boosted their year-end targets for the S&P 500. The median target on Wall Street for the benchmark index now sits at 5,250, up from the median target of 4,850 on December 30th per Bloomberg data. The street high target has moved up to 5,600 from 5,200 to start the year too. Now, this may be hard to see on your screen, but it depicts what we just discussed. Wall Street moving up their S&P year-end targets. A couple of guys went sideways like Evercore and Citi, but one guy stayed low and kept it low. Now, you see that white arrow I put in there for you? That's the one guy that went low and stayed low. That's JP Morgan, kiddies. What does Jamie Dimon know that we don't? You know, sometimes I feel like Wall Street doesn't have my best interests in mind. Sometimes I think they want me to come in and buy at all-time highs so they can sell into me at the top. What do you think? My buddies Donahue George and CSI didn't believe me when I told them, but the hedgies are selling like life preservers on the Titanic. Hedge funds sell U.S. stocks at fastest rate since January. Hedge funds sold U.S. equities at a rate not seen since early January, marking a significant shift in investment behavior after 5 consecutive weeks of net buying. This change in momentum was highlighted in a report by Goldman Sachs Prime Brokerage, which noted that the sell-off aligns with recent positive economic growth signs and a firm stance from the Fed Reserve, indicating that interest rates may stay elevated for an extended period. Now, that could change quick if we get cooler than expected PCE data on Friday, but I honestly don't know. According to this report, both macro products, including indexes and ETFs and single stocks, all experienced net selling. This last week marked the first time in 6 weeks that macro products were net sold, while single stocks saw their 3rd consecutive week of net sales, posting the highest notional net selling observed so far this year. The selling activity was widespread across all 11 U.S. sectors for the week ending May 24th, with industrials, information technology, financials, energy, materials, and real estate leading the downturn. The cyclical sectors in particular faced the heftiest notional net selling since December. Now, if you want to know what the hedgies are really up to, I'll tell you. Uncle Frank wasn't even going to make a video on the holiday, but when I saw this, I wanted my subscribers to know. This news broke on Sunday. Hedge funds take largest bearish stance in CME micro Bitcoin futures, since 2021. CME, that's the Chicago Mercantile Exchange. Data from the block shows that as of May 2024, hedge funds have taken a notable bearish stance on Bitcoin, holding the largest net short position in CME micro Bitcoin futures since the end of 2021. These micro contracts, each representing 0.1 Bitcoin, cater to traders seeking precise exposure with lower capital requirements than standard CME Bitcoin futures, which represent 5 Bitcoin per contract. The chart from the block indicates that hedge funds have markedly increased their short positions in micro contracts, reflecting a cautious or bearish outlook despite Bitcoin's strong year-to-date price performance, which saw it rise from 40,000 to over 68,000. Hedge funds were also at similar short levels during Bitcoin's all-time high in March. In contrast, other trader categories like asset managers and non-reported traders maintain relatively stable positions. This increased hedge fund shorting in micro futures suggests they are hedging against potential downside risks, even as the spot markets show bullish sentiment. So it sounds like hedgies have been selling into strength on equities, and they are holding their Bitcoin but hedging to the downside. If you heard something different, let me know. And from the Theaters Are Dead file, Kingdom of the Planet of the Apes global box office climbs towards giant milestone. Planet of the Apes quietly dominates the global box office, nearing the $300 million milestone in just 3 weeks. The latest installment in the franchise, directed by Wes Ball, aims for around $400 million globally before the end of its run, despite lower expectations. Sorry guys, I promised to bring all the news, good and bad. I'm sure the financial press is going to have a field day with this shit tomorrow, so be prepared. U.S. box office on track to have worst Memorial Day weekend since 1995. Okay, today we're going to talk about our newest board member, Miss Sonia Jane. Let's go back to the March 1st announcement, shall we? AMC Board of Directors elects Sonia Jane to serve as director of the company effective March 1st, 2024. Now, she's the CFO of Cars.com, but I would also like you to notice that Adam's little bio appears on this document as well. Adam Aaron, chairman of the board and CEO, former CEO of each Starwood Hotels and Resorts Worldwide, the NBA's Philadelphia 76ers, Vail Resorts, and Norwegian Cruise Line, as well as having been the chief marketing officer of both United Airlines and Hyatt Hotels and Resorts. Now, why do you suppose Adam doesn't mention the position he held at Apollo Global Management? That was the job he had just before he joined AMC. They were still paying out the balance of his contract even after he worked for AMC. He was there 9 years. People, you need to recognize he doesn't want you to focus on that chapter of his career because you may not like what you see. So now let's go get some details from the Form 8K filed the same day as the announcement about adding Miss Sonia Jane to our board of directors. Now I've highlighted some of the parts of item 502, which I want to share with you. It's titled Departure of Directors or Certain Officers, Election of Directors, as in this case, Appointment of Certain Officers, Compensatory Arrangements of Certain Officers, effective March 1. AMC, upon the recommendation of the Nominating and Corporate Governance Committee, fixed the number of directors constituting the board at 10 directors and elected Sonia Jane as a Class 3 director to serve until the company's 2026 annual meeting of shareholders. What comes due in 2026? Now, we'll come back to that. All right, so now it says Ms. Jane qualifies as an independent director. She meets the heightened standards of independence for audit committee membership, right? Ms. Jane qualifies as an audit committee financial expert under the criteria set forth. The board appointed Ms. Jane to serve on the audit committee of the board. She'll receive the standard compensation for non-employee directors. In addition, Ms. Jane has an indemnification agreement with the company, pursuant to which the company will indemnify her from certain liabilities that may arise by reason of her status as a director, and to advance certain expenses incurred by her. Now, here's the important part. There are no arrangements or understandings between Ms. Jane and any other persons pursuant to which she was selected to be a director of the company. There are no transactions between Ms. Jane on the one hand and the company on the other that would be required to be reported under Item 404A of Regulation SK. Remember that. Now, Ms. Jane is highly qualified, highly educated. I want to review her resume with you. Between 2007 and 2010, she worked in the investment banking division of Morgan Stanley. And not just that, but in the consumer retail group, right? Then Redbox, 3 years and 11 months as a CFO and a board member, right? Then she went to Cars.com for only 1 year and 10 months. Then for just 6 short months, she served as CFO for Convoy, right? Then she went back to Cars.com, and she's been there for the past 1 year and 8 months. Now, Sonia didn't add that she's a board member to her LinkedIn profile. I had to do it here on the screen. So from March 1st of 2024 all the way to the shareholder meeting in the future of 2026, that's going to be her service time with AMC so far, right? Now I want to share an interesting excerpt from her bio. During her tenure as Redbox's finance chief, Sonia was instrumental in the company's acquisition by Apollo Global Management. Now, guys, I understand. We're used to people from Morgan Stanley working at AMC. Our CFO comes from Morgan Stanley Mergers and Acquisitions. Shit, the director of our board still works for Morgan Stanley. So what, Uncle Frank? So our new board member helped Apollo Global Management buy Redbox. So Adam used to work there too. So what? Okay. What's this shit then, guys? Apollo-led sale of meme stock Redbox draws court challenge. A former Redbox investor sued Apollo Global Management affiliates over claims that the private equity giant ran the video rental business into the ground, then bailed itself out by selling the company on lopsided terms. The proposed class action challenges a 9-figure transaction that handed control of Redbox over to Chicken Soup for the Soul Entertainment, a Connecticut-based company that runs streaming video platforms, including Crackle and Popcorn Flicks. The merger price included a $50 million cash component and a $325 million in assumed debt, according to the complaint. Now, I understand if you don't know who all those faces are around our new board member, Sonia Jane, but I know who they are. That's the team from Adam's old firm, Apollo. And I can see you people coming from a mile away. See you at the bell.